Welcome to Behind the Billions, where we analyze the forces shaping money, power, and the future of the world. Elon Musk. The name is synonymous with immense wealth, but the way he achieved it breaks almost every rule in the traditional billionaire playbook. While others built fortunes on predictable consumer goods, oil, or finance, Musk has amassed his through high-stakes, capital-intensive ventures in space, electric vehicles, and artificial intelligence. How did he do it? It's not just about building successful companies, it's about a fundamentally different philosophy toward money, risk, and ownership. This is the untold story of Elon Musk's wealth strategy. To understand Musk, you must first understand his approach to thinking. It's rooted in first principles reasoning. Instead of looking at what others are doing, he breaks problems down to their most fundamental truths and reasons up from there. For most people, wealth is a goal. For Musk, wealth is a byproduct. The primary goal is solving humanity-scale problems. This isn't just a talking point. It's the core of his entire financial engine. It allows him to pursue a long-term vision that can span decades, not just fiscal quarters. A traditional CEO might worry about next month's stock price. Musk is thinking about colonizing Mars. This long-term vision is crucial. It justifies enormous upfront investment and years of losses that would make any typical board of directors fire their CEO. Think about SpaceX. In the early days, it was a money bonfire, with one rocket failure after another. Most investors would have pulled out, but the vision making humanity multiplanetary was the constant that justified the immense financial risk. This leads to his third cognitive pillar, an extreme tolerance for risk. Musk doesn't just tolerate risk, he seeks it out, provided the potential reward aligns with his mission. He famously put his entire fortune from the PayPal sale into Tesla and SpaceX, leaving him, by his own admission, borrowing money for rent. This isn't just gambling, it's a calculated bet on his own ability to execute a vision. This mindset first principles, long-term vision, and extreme risk tolerances the psychological foundation upon which his entire empire is built. It's what allows him to play a different game entirely. Now let's talk about the structure of his wealth. For most executives, compensation is a mix of a high salary, bonuses, and some stock options. Musk's approach is radically different. He focuses almost exclusively on ownership. For years, he took virtually no salary from Tesla. Instead, his compensation was tied to incredibly ambitious performance targets, market capitalization, production numbers, and profitability goals. If the company succeeded on a massive scale, he would be rewarded with more equity. If it failed, he would get nothing. This is the essence of his wealth strategy: direct alignment with shareholder value through concentrated ownership. He's not an employee earning a paycheck. He is the largest single owner, and his financial fate is inseparable from the company's. This concentrated ownership is key. While many founders diversify their holdings after their company goes public, Musk has consistently maintained a huge stake in his ventures. This gives him unparalleled control over the company's direction and reinforces his long-term vision. He doesn't have to answer to short-term-minded investors because he is the most significant investor. This approach also sends a powerful signal to the market and his employees. He is all in. His wealth isn't diversified across 100 different stocks and bonds. It's concentrated in the very companies he is trying to build for the future. This level of skin in the game is rare and is a core component of how he generates such massive returns. The risk is immense, but the potential for wealth creation is equally astronomical. The focus is on building the asset, not drawing an income from it. This is a fundamental shift from the traditional mindset of earning and saving to one of creating and owning. Musk's strategy is not about finding clever ways to invest money. It's about building the things worth investing in. He doesn't chase market trends, he creates them. This is a critical distinction. He identifies fundamental problems: sustainable energy, space exploration, human-computer interfaces, and builds entire ecosystems to solve them. Value creation is the engine of his wealth. Tesla isn't just a car company, it's an energy company, a software company, and a manufacturing innovator. By tackling a massive problem like transitioning the world to sustainable energy, he opens up multiple avenues for value creation. From battery technology to charging networks and autonomous driving software, this approach is the opposite of early diversification. The conventional wisdom for a new entrepreneur is to get one business profitable and then maybe diversify into other areas. Musk does the opposite. He stacks massive, complex, and interrelated challenges on top of each other. He uses learnings and technologies from one company to benefit another. The battery tech from Tesla informs energy storage solutions. The materials science from SpaceX could one day be used in other applications. This creates a powerful flywheel effect where success in one venture fuels the potential of another. He builds companies not as isolated entities, but as interconnected parts of a larger technological vision. This is how he builds moats around his businesses that are incredibly difficult for competitors to cross. He's not just competing on a product, he's competing on a system, a vertically integrated machine designed for a long-term mission. This is where real lasting wealth is forged in not by trading stocks, but by building the future piece by piece. So what can the average person learn from this? You might not be building rockets, but the principles are surprisingly universal. First, focus on building valuable skills. Musk's success is built on a foundation of deep expertise in engineering, physics, and manufacturing. Your career is your primary wealth-building tool. Instead of asking how to make more money, ask how you can become more valuable. Second, cultivate an ownership mindset. Even if you're an employee, think like an owner. How can you contribute to the company's long-term success? How can you create value beyond your job description? This mindset often leads to opportunities for real ownership, like stock options or promotions that put you on a path to greater influence and reward. The goal is to shift from being a cog in the machine to being a driver of its success. Finally, copy the principles, not the results. Trying to replicate Musk's exact path is impossible and likely disastrous. You can't just take extreme risks without his level of knowledge and control. However, you can apply first principles thinking to your own career or business. You can extend your time horizon and focus on long-term growth instead of short-term gains. You can learn to be more comfortable with calculated risks that have a significant upside. In conclusion, Elon Musk's wealth strategy is a masterclass in unconventional thinking. It's not about budgets, diversification, or steady returns. It's about a relentless focus on a long-term vision, the courage to take monumental risks, and a deep-seated belief in the power of ownership. It is a system built on discipline, patience, and the unwavering conviction that the best way to predict the future is to build it. It's a strategy that trades comfort for control, salary for equity, and short-term profit for long-term impact. This is the blueprint for creating wealth on a planetary scale. If you want serious analysis beyond headlines, subscribe to Behind the Billions.